By the year 2026, the overall volume of retail Forex trading in Tanzania has surged to record levels. Trading currencies here is entirely legal, but the ecosystem is split down the middle, forcing every trader to choose between two completely different operational paths. You either trade under strict domestic regulations, or you plug directly into expansive, globally distributed offshore platforms. Domestically, the Capital Markets and Securities Authority, the CMSA, acts as the modulator for any broker operating locally. Outside those borders sits an offshore market holding trillions in daily liquidity, managed by international regulators like the FCA, ASIC, or MISA. This creates a direct conflict for the intermediate Tanzanian trader. Do you prioritize absolute domestic legal security, or do you take on the administrative risk required to access institutional-grade trading conditions? Your decision dictates your legal protections, your tax liabilities, and the safety of your capital. Choosing a broker licensed by the CMSA keeps your entire operation inside the country. If a dispute arises, you have direct legal recourse through local authorities. Your accounts are also guaranteed to sync smoothly with the domestic banking system. The CMSA enforces stringent capital requirements and mandatory investor protection protocols. These mechanisms filter out bad actors before they can touch your money. This heavy regulatory blanket comes with specific operational trade-offs. Because the domestic market is smaller and has fewer authorized brokers, you naturally encounter less competitive spreads and higher overall trading costs. You also face a restricted list of tradable assets, often missing exotic currency pairs, and state-mandated leverage caps designed to throttle your risk exposure. A local broker provides an insurance policy. You accept higher costs and less market edge in exchange for state-backed peace of mind. Ambitious traders eventually look outward, migrating their capital to the international market. Offshore platforms grant access to institutional-grade execution technology, tight 0.0 pip spreads, and thousands of global market instruments. They also offer significantly higher leverage limits. This increases your profit potential, but equally scales up your exposure to total account loss. The cost of this access is the loss of CMSA protection and local legal support. Without a domestic authority watching your broker, the necessity of verifying their foreign regulatory status falls directly on you. You must confirm they operate under top-tier global regulations that mandate segregated client bank accounts and negative balance protection. This matrix breaks down the two options. We compare local CMSA brokers against top-tier offshore platforms across spread costs, leverage limits, local recourse, and asset variety. The sharpest divide sits in the local recourse row. Leaving the local ecosystem means leaving domestic safety behind. The offshore route offers lucrative conditions, but it shifts the entire burden of due diligence and risk management onto your shoulders. Beyond the regulations, you have to physically move your capital into a live trading account from within Tanzania. Across the country, mobile money networks dominate the transfer of smaller trading deposits. The everyday reality of local financial infrastructure relies heavily on these networks. Utilizing M-Pesa or Tigo Pesa results in nearly instant deposits, making it practical for moving smaller starting capital. If you need to move larger sums to an offshore broker, you generally have to rely on international wire transfers. While wires handle higher capacities, they introduce significant currency conversion rates and delays that can lock your money in transit for 3 to 5 business days. Funding convenience often dictates where beginners open their first account. Serious traders have to calculate the costs of this international capital friction. Then comes the often ignored obligation of trading from Tanzania: mandatory tax compliance. The Tanzania Revenue Authority legally classifies any net profit generated from Forex as standard taxable income. There is no special Forex tax category. Your gains fall strictly under the standard individual income tax brackets. This places a heavy administrative burden on your operation, requiring meticulous, self-managed record-keeping. You must track the entry and exit points of every trade, calculate the net profit or loss, and maintain the official statements from your broker. Treating Forex trading as anything less than a formal business with rigorous TRA compliance turns a profitable strategy into a legal liability. Mapping regulatory safety against funding friction and tax obligations clarifies where your capital belongs. This chart plots your required administrative effort and risk tolerance against your potential for cost efficiency and trading edge. Down in the bottom left, we have the safety-first beginner. If you prioritize local Swahili customer support, frictionless mobile funding, and zero regulatory anxiety, stick to a CMSA-approved broker. Up in the top right, we plot the ambitious optimizer. If you practice strict risk management and require institutional spreads and advanced platforms to maintain profitability, you must look to top-tier offshore brokers. Your choice of platform reflects your current risk tolerance and your specific level of market maturity. Certain top-tier offshore platforms attempt to bridge this divide, offering global power alongside local convenience for the ambitious optimizer. Platforms like our sponsor, FXNX, operate on globally regulated infrastructure with a MISA license, providing 0.0 pip spreads and negative balance protection, while still integrating familiar local mobile money solutions. No matter where you decide to trade, you must verify the broker's license on the official regulatory website before depositing your first shilling. Whether you leverage CMSA protections or offshore technology, building a sustainable future in the Tanzanian Forex market requires disciplined capital preservation.